Hello, I'm Mark Absey, Head of Indexing at Tematica Research, and welcome to the week ahead. As usual, we'll take a quick peek at what happened last week and then get on to what is popping up on our calendar. So, last week, pretty good CPI numbers, pretty good PPI numbers. No surprises there. Actually, they came in a little cooler than what people were expecting, which was good. So we got a little bit of a bounce there. And then, energy prices went crazy, right? We saw missiles being lobbed, well, not all over the place, but certainly between Israel and Iran. And energy prices saw a pretty big spike. Not surprisingly, energy was the highest sector last week, up about 5.6%. And then basically anything that was kind of energy reliant was lower. So to that end, take a quick run through sectors. Healthcare up 1.3, technology up about 34 bips, utilities up about 28 bips, right? Real estate flat, and then everything else was lower. So consumer discretionary, materials, staples, communication services, industrials, and financials. Now, communication services had more to do with what was going on with Meta and the kind of AI trade. And of course, financials had more to do with, rate expectations, right? Throughout this year, a lot of people have been calling for 3 cuts. They've been talking about 75 bips. It became clear, and it has become clear this past week. We'll get more about that next week, of course, with the Fed meeting and the updated dot plot. But it basically, like right now, Fed funds futures pricing in 50 bips by the end of the year. And, the way it's looking now, maybe that's 1 cut in September and 1 before the end of the year. Who knows? If you go by Fed funds curve, it's kind of flattish and then ramps up in Q4. So we'll see. They could save it for consecutive cuts in Q4. I don't think we're going to see another 50 basis point cut. At this point, there's no real reason for it. Again, all these numbers that are coming out with CPI and PPI, yes, they're softer than were expected, but let's not forget, we have yet to really see, tariffs have their impact. We've started to see it a little, and certainly with the uncertainty around tariffs, it's been kind of wreaking a little havoc on people's ability to forecast, specifically companies. We've seen a lot of companies, especially in consumer space, just not give forecasts. NVIDIA gave guidance the other week, and they said, oh, by the way, this guidance is X any potential China. We've seen other companies give, scenario-based guidance. If this happens, X. If that happens, Y, etc. So that uncertainty is still around. But again, we'll remain data dependent. We'll see what these companies are saying. And of course, we're going to be paying attention to what's coming out of the White House, as always. In terms of other assets, bids on the 10-year firmed up a little. We saw yields drop from 4.50 to 4.4, so that's 10 basis points lower there. Gold, gold is still hanging in there, right? About 33.86 by Friday's close. So, still kind of a destination of choice of sorts. Bitcoin, of course, still above 100,000. It's fluctuated. I think it touched like 110 or so. It's down a little to 104. Ether's hanging in there at 2,500. Certainly not the 4,000 we saw earlier, but also not the 1,500 we saw last month. So, firming up. Again, when we look at the markets last week and what they did, as you know, I like to kind of peek under the hood of indexes like S&P and the Dow and see, what's driving these moves. And again, when we look at S&P proxy, of course, with SPY, the Spider S&P 500 ETF Trust, it's interesting because big drivers kind of dragging the index down. I mean, the advanced decline line was 176 to 327, so there's a story there. In terms of participation among more than the Mag 7 and tech names. But again, you look at those top names that are, roughly 80% of last week's drawdown, 80% of last week's drawdown attributable to Apple and Meta. right? Now, what's interesting is that countering that, also having a kind of negative 80% contribution rate, was Oracle and Tesla, right? Which were up, right? Oracle had a crazy week, up 23%. Tesla's rebounding from all the press it's been getting lately, up about 10%. So, even if you strip those two out, there's still a lot of names that are varied, that are both kind of pushing and pulling on the index. Again, Visa, MasterCard down, Salesforce down, Amazon, Walmart down, etc. Right? On the upside, Palantir, Microsoft, ExxonMobil, Conoco, Chevron. Right? So we saw energy kind of step in again and help buoy the index. Mind you, the fund was down about 36 bips, but still, these are some of the things that are going on kind of behind the scenes. Dow, similar story, advanced decline line 1218, down 130 bips, 1.3%. And again, driving that mostly, we look at, Visa, Amex. Oh, we did see Salesforce in there again, Home Depot, Travelers, right? So there's a number of familiar names in there. And then again, on the upside, IBM, Chevron, Microsoft again, coming in there and helping buoy that index. As you know, we like to look at things from a thematic lens and through a thematic lens. So all the indices were down, all the broad indexes were down last week. We look at the thematic model suite, and there are definitely some bright points here, right? Nuclear energy and uranium up almost approaching 11%. Safety and security up 4.5%. Our market hedge model, got in the mix there, up about 2.5%. CHIPS Act as well, up 2.4%, right? And then again, in the mix, we did see some down strategies here, cloud computing, data privacy, digital payments, right? We're kind of lagging on the suite, if you wish. So, turning to this week, a couple things going on. We're going to get some retail numbers. Those are expected to dip slightly, I think down about 60 bips over last month. Although that's the top line number, but if you look at it ex autos, the expectation is that it's actually going to rise about 20 bips, right? So again, worthwhile to kind of look under the hood, look at those, top line and then core figures in all of these things. Initial claims coming, I believe Wednesday, expected to hold steady. So again, no kind of big surprises, or at least no big surprises expected. Of course, kind of the big news, although I don't know how it could be big news because the Fed's been telling everybody what it's going to be doing, and basically that's nothing. So, Tuesday, Wednesday, we get the Fed meeting, we get the results from there. We also get the June dot plot update, right? And again, as I talked about earlier, when you look at the Fed funds curve, the futures curve, basically looking at 50 bips by the end of the year. No change expected in this week's meeting, no change expected in July, perhaps September. Again, we got to see, and as of course what the Fed is going to be saying, what it's been saying for the last, since we come out of COVID, right? They're going to remain data dependent. So we got to see what the numbers say. Of course, we won't know what the numbers say until the policy gets nailed down, right? That's really what's kind of holding things up here. So as soon as we do get to a point where we actually know what tariffs are, when they're going to be implemented, then people can start to do their planning, start to do their budgeting, their allocations, and all of that sort of thing. On the earnings side, kind of in, I wouldn't say no man's land, but it's going to be a light week for earnings. Now, that being said, it was interesting because the names that I saw are actually going to be interesting because you're going to get a pretty wide breadth of updates on the economy here. So we got Lennar, right? So we're going to get some housing, Jabil. We also have Smith & Wesson coming out, right? On the employment side, we got Korn Ferry, right? So I'm sure we're going to get some updates there as to what kind of placements they've been seeing. What do they see going forward? Accenture, right? Again, what are they seeing? What are they seeing going forward, right? Are they getting these, big consulting gigs? Have we been seeing them be active in some of the M&A and other activity that we have seen year to date? CarMax, right, is going to be reporting as well. So again, interesting to see what are they seeing. What are they seeing with car prices, right? Again, if you look at that difference between top line and core CPI, it should be some indicator as what they might be saying. But again, we got to find out. And then there, on the restaurant side, on the consumer side, there's a company, Darden, who is going to be reporting, and I've talked about them before. I kind of like them because they're the brands that they own really kind of span the, let's say, socioeconomic landscape, right? So this is the company that owns Olive Garden brand, owns Longhorns, and owns the Capital Grille and also Eddie V's. So, as I've said before, not to put too fine a point on it, but your average Olive Garden enjoyer probably doesn't spend a lot of time at Capital Grille and vice versa. So it's interesting to see, and of course with our barbell approach to the consumer, it's going to be interesting to hear honestly where Longhorns is and where they are positioned, what they see for that brand. Because, kind of in the pecking order, Olive Garden, Longhorn, Capital Grille. So are we seeing that barbell effect between Olive Garden and Capital Grille? Are Capital Grille enjoyers kind of stepping down to Longhorns? I don't know. Let's see. Let's find out. So again, this coming week, we've got the Fed, which, should be kind of a non-event. We've got some light earnings, but some interesting earnings. And then, not to turn this into a political podcast, but we just got to see what the hell's going on in the Middle East there, right? Crude prices, like I said, energy sector itself, 3% of the S&P. Crude prices, lots more of the S&P, right? So we will see all these things as they unfold, and we'll see you next time. Thanks.